Morning, everyone, and thank you very much for joining me on the Crypto Minute. And thank you for transitioning from the morning market review to the Crypto Minute. And if you just are here for the Crypto Minute, apologies that we're late. We really got into our analysis on our previous webinar, but thank you for being patient. I'm just going to bring up the high risk investment warning. I'll keep this on screen for a few moments and just go through our commentaries disclaimer, and then we can start the analysis. Hey Zanetta, hello again. All right, let's bring up the market commentaries disclaimer here. Okay, and just our references: MarketScope, TradingView, possibly CoinDesk as well. CoinDesk got some really good articles, but let's bring up Bitcoin. Okay, so this is the weekly chart, and for me, analyzing Bitcoin in of itself is very difficult. It's very difficult because of just the nature of the industry. The nature of the industry has certainly captured the imagination of the participants in it, and with that, there's a certain I think there's a certain filter that probably needs to be applied. I'm not sure if I'm being unfair on that, but so Bitcoin for me is tricky to analyze just to get to the actual true fundamentals of it. I still battle to see the contributors to an intrinsic value of Bitcoin. Is it a store of wealth? And I'm not sure about that. Is it something that we can use as an instrument of exchange? I still need to see more evidence of that. And while certainly there would be some sort of transactions, it's still not mainstream to be considered a medium of exchange to me. Is it decentralized? I'm not certain that's the case either, because the Bitcoin miners are concentrated in areas where they can do their mining. Is it efficient? Energy efficiency, given given the high need for energy in terms of its mining, seems extremely restrictive. So what is the intrinsic value? It's very difficult for me to see it. I'm not saying there isn't one there. You know, I'm desperately trying to see where where it lies. So for me, a large part of the analysis actually relies on the denominator side of the ratio. So Bitcoin is the numerator, US dollar is the denominator, or we can look at it as Bitcoin being the base, right? US dollar being the quote, right? So in other words, the base currency is always going to be one. So one Bitcoin is effectively going to cost you $40,000. So that's a good way to approach it. And then the obvious question is, well, where is the movement coming from? Is it coming from the numerator side, or is it coming from the denominator side? And I think that's sort of my comfort level in terms of doing the analysis. There does certainly seem to be an evolution in Bitcoin to the US dollar, not so much in terms of it as a medium of exchange, which it may very well be, but it's certainly not a mainstream medium of exchange. Okay, but it's now almost become an economic indicator, and that I think is hugely beneficial on an analytical basis. Why would it be why would it be useful on an analytical basis? And I think the way to look at it is in terms of monetary policy and the risks, the risk on, risk off type of sentiment. So I would suggest that Bitcoin is not a haven. I would suggest that Bitcoin is not a store of wealth. Okay, I would suggest it's the opposite, subject to correction. I would suggest that Bitcoin is actually a proxy for risk. Okay, I'd say the more risk seeking the market becomes, the more Bitcoin benefits. And I would suggest the more risk averse the market becomes, the more Bitcoin is disadvantaged. Okay, so that's where I think the I think that's where the use for it is at the moment. Of course, the corollary of that is that, well, Bitcoin can be traded, because clearly if it now becomes a proxy for risk and there is a risk on sentiment, well, then Bitcoin's going to appreciate and then you can trade it. Okay, assuming that my assumptions are correct. Now, if there is going to be any sort of support for the US dollar, so if there's any support for the US dollar, that's going to act as a resistance for Bitcoin. So tailwinds for the US dollar are headwinds for Bitcoin. The same breath, you can say any sort of headwinds for the US dollar are tailwinds for Bitcoin. And whilst this kind of relationship that I'm suggesting now is not perfect, I would think that since lockdown and into the geopolitical conflict, that's the way the crypto market has effectively evolved, where it's moved. There was initially an hypothesis that Bitcoin was a store of wealth. I think we can throw that out the window. I think really what it is a proxy for risk. So if we go over here, let's add in a 30-week moving average, and let's take a look at it again in terms of Stan Weinstein's phase analysis. So we'll put in an EMA. I'm going to make it a 30. And this just comes from Stan Weinstein's book, How to Profit in a Bull and a Bear Market. Not the best titles I've ever seen, but it actually is a tremendous book. All right, and I think this is a very good way for us to keep an eye on Bitcoin. The reason that I think it's a good way to be keeping an eye on Bitcoin is because let's just zone in for this over there, is because it's become very cyclical. It's become very cyclical. Let's just go down one more. Yeah, that's fine. Yeah, now we're getting a good idea. So we've going all the way back now to the beginning of 2021, and you can just see the cyclical movements here. Very digital, isn't it? You can see up, down, very cyclical. Not really making much headway to the upside nor to the downside. We can probably put a a median price of about 50,000, so it's oscillating around 50, right? So that's kind of where the long-term equilibrium seems to be at the moment, subject to changes in the market. But this is really where Weinstein's method thrives, and the reason for that, I'm just going to bring up markers of paint again, is because he talks about the accumulation, the markup, the distribution, the markdown, the accumulation, and the markup, etc., etc., etc. And here you can see, so let's go from here. So we'll put in some distribution, markdown. Let's just change these colors up. Accumulation, markup, and here's the distribution. Okay, here's the next markdown, and here's the what looks to be the next accumulation. All right, and what we may want to do is maybe just, and this is dangerous, what I'm about to suggest here, but just in terms of our webinar, perhaps just optimize the EMA a bit more just for the sake of our webinar. So I'm just going to bring this in to say, let's halve it to 15, just make it a little bit, which makes it just a little bit more easier to read the accumulations and the markup. So price above the 15-week, mark up. Price below 15-week, mark down. Price above 15-week, mark up. Price below 15-week, mark down. Okay, so now we just want to see where we are. Okay, and you can see that it did briefly get above. Just trying to. I'm just gonna have to leave it there. It did briefly get above, but it's now capitulated back down. And this is something we needed to monitor, because if it stays below the 15-week, we actually may start getting new lows here. So the Stan Weinstein method over here, I think, is super helpful. The question is, well, what is actually driving the market here? Okay, and it seems to suggest, that the US dollar strength, which we saw in our last, webinar, is a huge influence on the Bitcoin US dollar pairing. However, and this is where it gets really tricky, what happens if the yields, as we spoke about earlier, do start to pull back, do start to moderate, because they're overbought at the moment? I think that we're going to see at least some sort of support coming here in the near term. Perhaps we get some sort of bounce, but ultimately, as the US dollar appreciates, pressure is going to mount on Bitcoin. Why? Why is that? Because whatever is a tailwind for the dollar is a headwind for Bitcoin. Whatever is a headwind for the dollar is a tailwind for Bitcoin. What are the tailwinds for the US dollar now? Massive monetary policy tightening, to the point 50 basis points May, 50 basis points June. Quantitative tightening, complications with quantitative tightening. In my opinion, there is going to have to be some sort of side effect here, and I would probably think that the side effect here is a dollar that's too strong for the US. You know, they'll find themselves maybe in this is clearly supposition, but sort of 2 years down the line with an incredibly strong dollar, to the point that it starts impacting. They're not really an export nation, but whatever they do export, the export industries will start taking massive strain. The idea here, of course, is also that any debt in US dollars puts huge pressure on, especially on sort of your emerging economies. Third world countries if there's a strong dollar, going to take huge strain off that. That's our position though, but I think that is a logical side effect of quantitative tightening, just like mass inflation was a logical side effect of quantitative easing. If that is the case, it's hard to really see this as a long-term play. It's really hard to see it as a long-term play because the denominator is going to put so much pressure on the Bitcoin US dollar. The only way that the Bitcoin US dollar, in my opinion, actually moves higher, sort of over the long term, in a tightening cycle. So there's an assumption that we remain in a tightening cycle. Okay, if we go out of the tightening cycle, this statement I'm about to make becomes null. Okay, so unless there is some sort of inherent value in Bitcoin that can counter the strength of the US dollar, and that's what I'm battling with. What is that intrinsic value in Bitcoin? So I think if it becomes more mainstream, I think if it becomes a regulated market, believe it or not, ultimately, I think that benefits Bitcoin US dollar because information flow becomes a lot more streamlined because of the regulation. I think that if there is just a bigger adoption overall by Bitcoin, then for Bitcoin, that probably plays into causing an appreciation of the cryptocurrency. Again, these are big sort of ifs. You know, the cryptocurrency supporters will of course say, well, it's a given. You know, it's a given that we're heading that way. Well, it might be. I don't know. To be honest, you know, they don't really know. They're making a huge assumption as well. In fact, I would argue that as the dollar becomes more digital, as central banks start adopting digital currencies, those get a bigger pickup than Bitcoin, which is probably becomes regulated. We've already seen Janet Yellen indicating that there is going to be regulation. She just lacked on the details of that regulation. So again, the real strength of the Bitcoin US dollar instrument for me right now is the proxy for, not the proxy, is it's become an indicator for risk on, risk off. Okay, risk on benefits Bitcoin, risk off is to the detriment of Bitcoin. Okay? Tailwinds for the US dollar, headwinds for Bitcoin, headwinds for the US dollar, tailwinds for Bitcoin. And I think that that in of itself is the point that we've evolved to. Okay, I think that's the point we have evolved to. I don't think that we have evolved past that. I don't think we've evolved to where you can say we've got an absolute intrinsic value for Bitcoin. If we do, what is it? What's the intrinsic value for Bitcoin? And I think that's the way we have to keep an eye on it. This Weinstein chart, as we see at the moment, does indicate weakness. If we go down to the zone analysis, we're in zone 3. Okay, the only saving grace here, I would expect some support if yields pull back. If yields pull back, dollar becomes less attractive. Dollar becomes less attractive, Bitcoin becomes more attractive. Okay, but I would suggest that would be short-lived. I would suggest that becomes short-lived, and the more the yields move up, and they are going to move up because of quantitative tightening, the more pressure on Bitcoin unless there's some sort of intrinsic value that gets unlocked from Bitcoin that I just am not seeing. If there's any comments, please go ahead and talk this through. Alrighty, let's wrap up here. I'm going to put these onto the Telegram channel. What article from CoinDesk? I haven't quoted any article from CoinDesk today, but so there's no article from CoinDesk, Anna. This is just sort of my own interpretation. Alrighty. You said, yeah. Yeah, there's nothing. I'm not going to present anything from CoinDesk. I think we'll leave it at this point. And the Telegram channel. Yeah, Rob, we do have a Telegram channel. Can you send me an email? I'll send you the address for our Telegram channel. Happy to do that. All right, guys, let's wrap up here and let us reconvene tomorrow. I want to wish everyone a very good day ahead, very good evening ahead, and we'll chat tomorrow.